All right, I just wanted to start reviewing, so make this chart bigger, show what happened. So we'll start off from the left-hand side right over here. Actually, here is good because this shows that the market terminated. This was a climactic move right here. As indicated by the volume and the size of the move. And of course, it goes a little bit higher. And after that, you had your, actually, you don't have volume off the top here, but you do have your climax ending action and the beginning of a new trend soon after by way of a change of behavior. All of this is lack of demand. And it goes down, 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 up. This right here is just spacing out. Okay, so here it was testing. It was testing a level to see if it would be respected. And what's interesting to note is buyers did come in. Buyers did come in. You see right here, they came in around 8:45, I think it was. But they were unable to take out resistance. So they came in. This was the initial test. So right here, you can see their prints. They're buying here, but unable. And this is heavy volume. So like over here, you have like what is it? Biggest volume in 100 bricks. So they're coming in. And then after that, you had a spring right here. A lot of times this is what happens. If the wave doesn't break a high, it's subject to a test, possibly a spring. And from that spring, you have a move, but it doesn't continue. It kind of just tests the breakdown, you know? So you could tell it's a big move, biggest in 13 waves. And it just gets sold. Goes sideways, buyers attempt again. Why? Because this is a support level. So they want to hold support. And they buy here and it breaks. So initially you look at this and like, huh, is this a spring? But when it comes up here to the resistance, it's unable to break. And what is the nail in the coffin? The nail in the coffin is here. This one, that's your second nail right there. This is telling you, hell no. All right. The pressure here is ridiculous. Meaning this is the biggest in 100, and this also before that was the biggest in 100. This is smart money. They're the only ones that can put up volume like that in a brick, one, and then again, and finally it breaks. So this is a definitive break. After that definitive break, what do you have? You have a test right here. After that, you have down move. As the move continues down, you know, they come in and start buying right here. And one way to detect that is follow through. So again, the sprint is the biggest in 100 up bricks, and it has follow through, and it takes out this high, and basically goes to resistance. From resistance, oh yeah, and this is the biggest volume in 49 waves plus. So I mean, obviously this is buying pressure, more buying pressure right here. This is the start of a new accumulation. This is the start of new accumulation right here with the heavy volume. Now here's the thing. The market, if it doesn't trend, if it doesn't create trend by confirming, going higher and this and that, or at least having a low volume pullback. So if you ask me like how would Wyckoff do this? He knows how to get in the climax itself, by the way. But anyway, what he recommended was to wait for the low volume pullback. And you don't really get a little shallow low volume pullback. What you do is you get a spring. So after spring, and I knew this was a spring. You know how I knew something wasn't right is because the S&P index was making higher highs here. Over here is making low low. but it's making a higher high on the index. S&P demand came in, and this is also demand, like I explained to you, accumulation, right? And it's making a higher high, but on the Dow, it's not. Why? It's a clear case of divergence, right? So who's going to win? Obviously, the 500 plus, the 500, and it takes out one high, two high, and it's making a higher high, establishing trend. But S&P, they drive it purposely. I mean, on the Dow, they drive it purposely low, even though over here it's a higher low and a higher high. So this was an indication to you and me that this is a spring and it's going to reverse. So then after that, all I'm doing now is I'm patiently waiting for confirmation. I'm still working on these supply and demand signals up here. All right, so don't sweat it. But anyway, over here, where the fuck is it? There's a clue, a little clue that we're going to go. You see, if the selling would have won, would we have gone higher than this high? This high is for 35663. All right, so 663. This high is 664. I knew right there that they're probing the highs. Okay, that's not an upthrust. That's not an upthrust. It's a probe to go higher. Right there. There's a probe to go higher. All right, it makes a higher high. So when it dips, you just wait and wait for the higher high to be created, which it does right here. All right, and the thing is, when it takes out this high, it does it on the biggest volume in 21 bricks. So I knew, like, okay, demand is here on the S&P, obviously, right? So over here you have the breakout volume right there. So now it's time to get in on the pullback right here. Why? Because you have accumulation in the background, right? You have finally a break above the highs, and you have correlating market also going, which has a demand. It went up 10, so I forget what it was like. I think I divide by 100 ticks or something. I don't remember what I divide by. But this is the biggest wave in 1, 2, 3, 4, 5, 6, 7. Get rid of the minutes. This is the biggest wave in all the waves since the uptrend. If you see 4, 6, 5, 6, 7, 8, ding, 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 10. So obviously demand is in, and this pullback here was some type of spring attempt to catch these shorts because it yielded this up move, which broke out amongst 1, 2, 3, 4 highs. So I mean, game over for the shorts. And then it was just a matter of, like, timing the entry to get in, and you get like this was actually a 5-hour trade, but you get out right here 4-hour. So test 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. I think was here. Anyway, so right here is game over. Bye bye. Done. So what are the key takeaways? The key takeaways here is, like I explained so many times, volume off the bottom. Why? Because smart money creates highs and lows. They know what those highs and lows are going to be. They create them, or they have knowledge of them. And this is clear indication. How did this wave be from the low be the one with the biggest volume, all buying? They knew this was the low, or they created the low, or whatever. Buy. Then do a little bit of a spring and defend it by buying more. So 43 plus, say, 33, 4, 5, 6, 76. 100 contracts, and then the 32, boom, and take it up, and in this 81, sell it. As it's going up, sell your inventory. 76, okay, so selling in this minor climax, on the way up, sell, and that's it. This is climax right here. Somewhere here should be a, what the hell happened? This was the effort, and that was it. So what do we learn from here? First of all, if you look at the data today, you're going to see the accumulation range. Study its behavior. You will see on the left hand side, how did this turn occur? It occurred, the left hand side ended because of a volume off the bottom, leading to a change of behavior, leading to shit in the middle, and then a higher high with the breakout right there on the biggest volume in about 12 bricks, taking out that high with the other index confirming, right? And then a pullback entry leading to 4R, 5R, 5R. Well, I always forget 1, 2, 3, 1, 2, 3, 2, that's 3, 1, 2, 1, 2, 5R move. Right, that was a 5R. Right, so they're done with the down. Next market, the crude. All right, so crude was going down, 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 down here. Then it went into a test position. All this test, this area is very, very lucrative. Very lucrative. Why? Because this is where they're going to defend trend. So it's basically a pullback on a higher time frame to test position. All right, somewhere as a test position. So what happened here? This was a big move. This was some selling and some shit here, so I can't really forget this one. It's a little choppy, so I don't want to go through all the chop. It's the volume off the bottom, rally, higher high, test, bang, right there. So, but I want to do a good one that's very easy to see. This is a good one. It's not that great, but whatever. Right there. Okay. So once again, here you have markets that are uptrending. You don't have a very clear volume off the top, but it's there. And because, like I said, smart money knows highs and lows. Either they know it, they create it, or whatever, but they take their positions there. And to me, I am convinced, because I've been showing you evidence every single day. It shows like how to do it. So here's the volume off the top. This is the biggest volume in 40 bricks. All right, that right there. That's 1,500 contracts in that brick. All right, now it has to have follow through. All right, it has to have follow through. So it has some follow through, little pullback, and bang, kiss the baby. Done, finish. Right there. It's all pressure. So we have your volume off the top. You have a change of behavior as well. That this has broken the trend. Where's the bar that breaks the back of the trend? That's right here. That is the trend breaker right there. That 1,500 contracts, you see that red spike here? That's taking out these lows. That right there is your trend breaker. Your back breaker. That's how Wyckoff called it. He says it's the bar that breaks the back of the trend right there. So it started with volume off the top. It had a change of behavior. The change of behavior was validated by the fact that it was volume off the top. The volume off the top was validated by the fact that it was a change of behavior. Both of them together validate each other. And the third piece here was the backbreaker. And then after that, pull back, and this is your confirmation lower low, right there. Now it's just a matter of where the test is going to be. All right. Now initially they give a test to do what? Just test the breakdown. That's the breakdown, right? So they test it here and then go a little bit higher and give you one test and with a little bit of move. Then after that, this position is a very lucrative position. So buyers were here and their orders just got triggered. All right. They have their orders there in a test position. So pull back to test, rallies offering another really nice low risk short opportunity against the volume off the top. Bingo. Right there. And then after that, this was the real move. 1, 2, 3, 1, 2, 3, 1, 1, 2, 3. It's a 4-hour move. All right, 4-hour move. After it had a 4-hour move and went to the bottom, basically the support level, the test level, the support level, right? What happened? Buyers come in. All right. So now again, like I know there's some shit gonna be here. Here you see, look, there's the volume coming off the bottom over the course of 1, 2, 3. Ding, 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 break. Now you get that pullback, yeah, and you get a higher high. So this is telling you that this is accumulation. And the thing is very hard to tell if it's like a move with the higher time frame trend that will continue, or how long it'll last, or if it's a counter trend back up here. It's just a trend down, trend up. One is with the high time frame, one isn't. It's just, I mean, it gets too complicated, and it's just a multi-hour move. That's all it is. All right, but you know that this accumulation or could be covering or whatever, but it's buying pressure. That buying pressure holds the low, makes a higher high. So you got your volume off the bottom in these 3 bricks. Volume off the bottom confirmed by the COB. And the COB confirms the volume off the bottom. Is there a backbreaker bar? I don't see it. Maybe this, I don't know. Could be this, but it doesn't break anything. So now you have your confirmation here. And then, by the way, pullback here is very low, which means probably your lack of supply. And so this leg is an uptrend. Now, whether it's counter trend or this trend, I don't get into that. Like the way Wyckoff explained, he didn't care. He said there could be up to 3 trends in a day on an active market. And, so you just be aware of when the trend's about to change. So he would just pick an active market and trade it. Like that had good range. And it's active, he traded. And if it went up, he would trade it. Went down, he would trade it. He didn't care about that. He just, because he was a specialist in turning points. So he's a specialist in trend using a wave chart. And I'll go over that. But anyway, the point here is you have volume off the bottom validated by the COB validated by the volume off the bottom, and the confirmation validating the COB. If you had a pullback here that was low volume, that would set up a springboard opportunity. So, for example, this here, I'm not sure if he would. Actually, I would need a bar chart, because bar chart for the low volume pullback is much more clearer than this type of chart. This chart, it takes out a lot of the noise, but it takes out data as well. So anyway, so over here is your change of behavior validated by volume off the bottom, volume off the bottom validated by change of behavior, with change of behavior validated by the confirmation. You're all clear for a pullback, but unfortunately you don't get a pullback. So done. All right. So by watching these videos, you get understanding of the real Wyckoff method and applied intraday from a practical. What is this? Anyway, I don't know what this is, but again, this also here This, you see that the opportunity here, right? Shit. 1 second. There's a volume off the bottom. There's the biggest wave in 49 waves, setting up the change of behavior, validated by the higher high, sets up the pullback, bang. Right? Because it's just how demand overtakes supply and how supply overtakes demand. There is principles of how demand overtakes supply and how supply overtakes demand. This is what Wyckoffean style traders, those who are real Wyckoff traders, not the schematic traders because they don't know what they're doing, real Wyckoff traders will know this, all right? Because you cannot do this without volume. So how are you going to do it with a schematic? The schematic doesn't have volume. It's just labeling. And the labeling is not teaching you anything because you don't see the volume under when that model was made, no one put a volume under it. So it's those who take a look at that model as their only point of reference are just arbitrarily labeling in hindsight. It's not tradable at all. It's a model, but the model is lacking seriously. All right, so I'm done with this. Let me go to next. So next market is gold, and it was going down. Here it got very interesting because I don't remember it looking like this, but I guess this gold. All right, never mind. I can't really read this now. Okay. They're selling here. There was buying here, but it was invalidated by this spring on heavy volume that went down and having a lower low. But at the same time, this actually looks quite bullish because it's a spring, hold, spring, and made a higher high. The only thing that was a red flag was this price volume action here. You want this before and only before, right? Because, and the second thing is, you should have taken this out. They took it out here. This is a little bit confusing. So just stay away. All right. So first red flag is like when there's a spring of your change of behavior. When you're trading and there's a spring of your change of behavior, already it's going to require some brain, logic to figure out what is going on, right? Because it could be bullish, it could be bearish. In the prior example, it was bullish because it was a spring and eventually made a higher high if you just waited, and the index was supporting it and all of that. But here, when it goes down, one of the key things that you want to look at is this. What's the volume here? 14. What's the volume here? 15. What's going on here? Why is the down volume more than the up volume? So that could help you. Like if you see a change of behavior and you see a spring after that, or a wave, like how is it doing the spring? How is it doing the spring? Here, there's a red flag. Something's not right. Yes, it evaporates, and yes, it does that, but whatever. So eventually we get back here, and here's your volume off the bottom right there. This is your climactic action. What the fuck? This is your climactic action, the biggest down wave in 25. Do you know it's a climax? No. How do you know it's a climax? After the change of behavior. So you will not know. It could just be a high selling or whatever. In this case, the climax is followed by a volume off the bottom, big green right there. And big green doesn't mean shit until it has follow through up, because people buy and sell for many reasons, and it could be effort. So you don't know until it has follow through. So this follow through gets me very excited. Then holds lack of supply, has the up wave, pulls back to test, and this is a little bit choppy, but and also sprung this area, which was deliberate, by the way. And how you know is look at the volume that came from that spring. You see, that's all buying. So gold is a little tricky. Anyway, over here, you see the gold and silver index. They're not ready to go up. Why? They're selling, 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 selling. Where the gold and silver index changes is right here. See that? We get rid of the. Let's get rid of this. So you have 45, 46, 12, 56. As it does that, it takes it out this high, and this looks like a springboard also, but this thing comes in as, this is the biggest, and has a little up move, holds the low, and goes. So it's not a big move, but when I see this, I know that there's something not right, because gold silver index going down. Why is gold, ready to go? Something's not right. Anyway, so fuck this. I'm done with this. This was a tricky market today. Here was the trick. This looked like climactic. This looked like volume off the bottom right here, or some type of climactic little diamond with a little pop, and then it rallied. So the error would be to buy the pullback, because on the pullback, there's just a lot of volume coming in. And this move here was a successful stop run right there. You know how you know? Because when it breaks the low on increasing volume, has no follow through, what did it do? This is a bear trap. It's not just a stop run, but it's like also a bear trap right there. Boom. And then it ran them over here, because this is where the stop would be. That's why the volume increased right there. And then it went down. So this bear trap, and get rid of the bears, do a drop, and all of that. So this is a challenging market. I am looking into using indexes to help determine direction. Anyway, next market. All right, so this market was interesting. I'm not going to go into every signal back here because it gets choppy. All right, over here, basically had reaccumulation occurring. All of this reaccumulation. All this. So after the reaccumulation occurs, you have this rally, pullback, 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 breakout right there. And buying pressure here, because they're breaking out. So, I mean, it's just in markup, markup, markup. Here gets, someone's taking something off here, right? This was some type of volume off the top. And it doesn't have immediate follow through. Okay. It doesn't have the immediate follow through. Instead, they do an up thrust, and then there's the selling. This right here is your change of behavior. Remember, volume off the top, volume off the bottom. They validate change of behavior. Change of behavior validates volume off the top, volume off the bottom. Then you have confirmation validates the what? The change of behavior. And then, unfortunately, though, and this happens, you get a pullback, right? You get a up thrust after distribution. You don't really get this a lot, like this UTAD or whatever. is very rare. I don't, think it's going to happen. In most cases, it's not happening. And the upthrust happens typically before or before or after the change of behavior, not after lower lows have been established. Because why? Let me explain the logic. All right. So, because a lot of folks are talking about upthrust after distribution and this, that, whatever. Here are the facts. All right. When you have a climax, and it has that change of behavior, and it has volume off the top and all of that, right? After it breaks a low and confirms to go lower, do you think they're going to give an opportunity to these buyers to get out break even? Will they give an opportunity to these buyers to get out break even? This is the climax, change of behavior, low volume, down. This is why upthrust after distribution does not occur a lot. In most trends, I have not seen it, because it means that these guys, because there's a climax there and they're trapped, they get out break even. Do you think the market will give them an opportunity for it to go up and for them to get a sigh of relief and all to come out break even before it drops? No, it will not do that. In fact, if the market comes here and makes a higher high and lets them get out, it will be after shakeout, and it will probably be because they're going higher, because the market wants to go higher. The only time they'll give the trap buyers an opportunity to get out is to buy what they're going to sell in order to mark it up even more, not to get out break even and then break. All right, if they want to catch early shorts, which is the logic behind upthrust after distribution, they can do it other ways, but not to take out the climax high, because it doesn't make sense. If they get out break even, right? First of all, what's the point of that? There's no benefit to be gained. But also, as the market goes down, eventually they will sell, and that sell will cause panic selling, which will increase the profit margin for the shorts. So there's no reason that it's actually beneficial for these trapped, for them to stay there so they can capitulate later, taking the market even lower. And if the CM wants to take it up, get the shorts out via a shakeout here. So they're no longer there, they're out, capitulate, then take it up, absorb the rest because of higher prices to come. So, okay, but at the same time, there are times when it does occur, and to catch early shorts, as is the case here. All I'm saying is that it's not typically the case. So against this high, that wick right there, and this is not, you do not see this that much, is your, what the UTAD. That's your upthrust after distribution. Typically not get it. In fact, typically it's a probe to go higher. And in this case, I'll be very skeptical, because this buying here is buying pressure, and it can mean what? It can mean reaccumulation, meaning you take the market to support, right? They don't break this low. They take it to support, reaccumulate it, There's some selling here which gave you a tip off that the sellers are going to defend, but to the higher high, break the high, come back a little and blow it up. Go right up. So rally. All right, but the sellers are saying and they defended right there. And you see that this volume here is 57, which is bigger than the volume of this entire wave. This is 23 in 3 bricks, and this is 57. So this is what I call your reverse breakout. On an up thrust after distribution position, reverse breakout, take it down. And now the trend is on the downside. Why? You have selling, you have volume off the top in the form of a reverse breakout, an up thrust position. So just think of it like volume off the top validates the COB, COB validates the volume off the top, confirmation validates the COB. This is in a downtrend. All right. The other thing, the other tip off here was this right here. This is the base metals base metals index. The base metals index let me get rid of this. I can't read this. The base metal index had the biggest down wave. The biggest down wave right there. Right there, the biggest down wave. So that is a red flag for all longs. Why is this the biggest down wave? They took out 1, 2, 3 lows. It took out 3 lows, 4 lows with the biggest down wave. And here's this is like awesome. Like look at this 30 and this 27 is bigger than less than 30, 40, and 20 and 31. So he would call that like a lack of demand. And there's the confirmation low low. So there you go. So I mean, it was ready for a turn, and the overwhelming trend of the base metals index was down. Okay, let's go to the next. I think that's enough for today. All right, so a couple of key lessons here for my fellow white coffeeans is 1, volume off the bottom, off the top, validates the COB. And vice versa. The confirmation validates the COB. Now, within that position, there is a key position called the springboard, which is what Wyckoff said to trade. That springboard is a small wave and a low volume wave. It's the smallest and with the least amount of volume in multiple waves. So the pairing of a very strong change of behavior, which could be a sign of weakness, with a small, weak wave, that is small price movement and low volume, small volume, that pairing, when you couple the strength from a change of behavior with a low volume pullback that is small, a shallow and low volume pullback, can create the strength with the weakness that can change trend. Strength plus weakness is a trend change. All right. So anything else here? Yeah, this is a reverse breakout. So at support or resistance, you want to look for a reverse breakout. That's also a key behavior. I'll give you an example here. This is with a trend, okay? So you see when it goes down and does a spring here, right? It goes down on 4, but it reverses back up on 12. You see? So, I mean, this is it only works in key positions. Like, key positions do not, you know, so you see like a wick or something, and then immediately reverse breakout will create the downside pressure. All right. So basically, think of an up thrust or spring, but validated by high volume. All right. And I think that's about it. All right. Thank you all. Have a wonderful rest of your day. I hope you learned something. Bye.